BlackRock's Sustainable American Income Trust has three managers who are part of BlackRock's large, experienced U.S. income and value investment team. Tony DeSpirito, CIO, U.S. Fundamental Equities; David Zhao, Co-Director of Research; and Lisa Yang, Consumer Discretionary and Staples Specialist, can also draw on BlackRock's broader resources when required. They aim to generate an attractive level of income and capital appreciation over the long term from a high-conviction, diversified portfolio of primarily U.S. stocks that are selected on a bottom-up basis. Performance is measured against a broad U.S. value index. In this video, we highlight the important elements of the Trust's investment story. The Trust offers exposure to the world's largest stock market, with the U.S. making up around 70% of global indices. The Trust's emphasis on quality and value sets it apart from growth-oriented funds. The Trust was formerly known as BlackRock North American Income Trust. On the 30th of July 2021, following shareholder approval, the Trust's investment mandate was changed to incorporate explicit ESG objectives, as the Trust's board is mindful of the increased demand for investment products that place a sustainable investment philosophy at their core. The focus on reasonably valued, dividend-paying stocks was maintained, but the portfolio was changed to a multi-cap rather than a large-cap fund, while the number of holdings was reduced from between 80 and 120 to between 30 and 60. Also, the ability to write covered call options to enhance the level of income was removed, as this strategy was deemed to hamper the fund's capital growth potential. There are three main elements to the Trust's investment process. Idea generation. The managers aim to identify the best ESG and alpha opportunities from an investment universe primarily made up of North American large and medium cap equities, although up to 25% of the portfolio can be invested in liquid non-North American companies. ESG exclusion screens are used to narrow the investment universe. Fundamental research. This involves assessing the materiality of a firm's ESG and sustainability factors and evaluating its important earnings drivers, along with engaging with company managements on business and ESG issues. Portfolio construction. The fund is diversified by sector, industry and style factors. There are clear buy and sell disciplines for both fundamental and ESG considerations. Compared with the reference index, the Trust has notable overweight exposures to technology and healthcare, with underweight positions in industrials and real estate. ESG is deeply embedded into the investment process. Portfolio companies are classified either as ESG leaders, ESG improvers, or sustainability enablers. ESG leaders are best-in-class businesses that effectively manage environmental, social and governance factors to benefit all stakeholders. These firms make up the majority of the portfolio. ESG improvers are companies showing demonstrable progress on their ESG journey, where active engagement may lead to improving ESG practices and more sustainable outcomes. Finally, sustainability enablers are firms advancing the transition to sustainable solutions, such as greater energy efficiency and a lower carbon footprint. Outright exclusions from the fund include businesses manufacturing controversial weapons or civilian firearms, fossil fuel miners, thermal coal and tar sands, and tobacco companies. The Trust's resulting portfolio has premium ESG scores in all three of the subsectors: environmental, social and governance, and lower carbon emissions intensity than the reference index, as measured by MSCI, which is a leading external ratings agency. U.S. funds typically focus on capital growth rather than income, but the Trust also offers an attractive dividend yield that is consistently above the U.S. and world markets. The Trust's annual dividend of 8.0 pence per share, 4 payments of 2.0 pence per share, has been held steady for the last 6 financial years. The board expects this trend to continue, by supplementing income with distributable reserves when required. Renewed annually, there is the authority to repurchase up to 14.99% and allot up to 10% of the Trust's share capital. There had been no share buyback since November 2020 and no issuance since April 2021. However, considering the prevailing discount to NAV, on the 20th of October 2023, the board restarted buying back shares to be held in Treasury, and has continued on a regular basis. If you would like to learn more about BlackRock's Sustainable American Income Trust, please visit www.edisongroup.com.